It's 9:20 a.m. Pacific Daylight Time. It's the 22nd day of October, 2025. This is episode 1195, and you're coming here for all the news you can use about Bitcoin and more. And man, it's all over the damn place. I got some good ones today. At least I think I do. We're going to talk about prediction markets betting on the U.S. government shutdown. We'll see what these guys have to say. Lawrence Leopard is out there on Twitter, and he's got a little snippet that we're going to need to see about something called Primalend Capital Partners filing for bankruptcy. Yeah, there seems to be a credit crisis brewing. Now, Asia. On over to Asia, we're going to be talking about exchanges slamming the door on crypto treasury companies. And then Andrew Cuomo does what to save his dying mayoral election campaign for New York City? Yeah, I'll give you a couple of guesses before we get there. And then Senator Warren is on the warpath. She doesn't like the stablecoin law. We'll just leave it at that for now. And then Peter Brandt decides to compare ones and zeros to soybeans in the 1970s. Yeah, it's a stretch, but you got to keep your eye on the detractors out there. Otherwise, you won't know what's going on. And again, that's why you're here at the Bitcoin and Podcast with your host, me, David Bennett. Then we're going to talk about Taproot assets. Maybe we'll get some clarity as to exactly what they are. Are they really that terrible? Probably, but is there something else that they could be used for that's not terrible? Also, probably yes. And then we've got something called Bitcoin OS securing a lot of money from Greenfield Capital. ZK proof programmability on Bitcoin mainnet. What does it all mean? Well, you'll find out. Trezor has unveiled their Safe 7, and then we're going to finish up with the builders converging at Merida. Merida? I don't know exactly what it is. Startup Day in Yucatan 2025 recap. This is actually part of Pleb Lab. And I guess they've taken it to someplace else instead of Austin. So you're along for the ride just like I am. Let's start it out here with prediction markets say government shutdown will be record setting. Just give me a record setting shutdown. I don't know. I was told yesterday that this was going to be cleared up by the end of this week. Who to believe? I don't know. Prediction market bettors are growing increasingly convinced that the United States government shutdown will make history. Contracts on Polymarket and Kalshi are pricing in a resumption of government after 40 days, surpassing the 35-day record set back in 2019. Traders on Polymarket assign the highest probability to a resolution somewhere around November 15th, while Kalshi's duration market forecasts an average length of 41.6 days, which would bring it to November the 11th. Even as much of Washington ground to a halt, with nearly 1 million federal employees either furloughed or working without pay, the Federal Reserve remains insulated. The central bank operates independently from congressional appropriations, meaning it can still hold policy meetings and adjust rates during a shutdown. Polymarket bettors assign a 96% chance of a 25 basis point cut at the upcoming October 29th FOMAC meeting, followed by an 85% chance of yet another quarter point cut in December. The challenge is informational, with jobs, inflation, and GDP reports delayed. The Fed may be forced to make back-to-back cuts based on incomplete data. It may be entirely coincidental, but the last prolonged shutdown in 2018 through 2019 aligned with Bitcoin's bear market bottom, when BTC fell to just above $3,000 before rebounding strongly after the government reopened. Yeah, I'm not going to give it all that much. It's like, I don't know, man. It just seems like a coincidence to me. For whatever reason, it doesn't. You know what? It doesn't matter. This is sort of like, I always rail against things like Polymarket and oracles and whatnot, because all I keep thinking about is it just seems like another form of gambling. And I hate gambling. I hate it. I mean, gambling for fun, Las Vegas, betting on sports, all that kind of thing to me it just seems like, I don't know, something that you probably shouldn't do. But then a lot of other people are saying, well, it's not, prediction markets aren't just for that. It's taken the temperature and taken the pulse and other vital statistics of a whole lot of people that are representative of a whole lot of other people, making what they think is going to happen known. And I just can't sweep that under the rug. I just can't. And these prediction markets seem to be like dead on a lot of times. So are we looking at a prolonged shutdown that goes to 40 to 45 days? Who knows? But right now, it seems, as far as the people that are able to make bets on this thing or are willing to make bets, that's probably what's going to happen. So we'll, as always, you'll have to wait and see. So Lawrence Leopard, getting back into something different, has put out a tweet that says, "Turns out the lower income consumer is in deep shit. Who knew?" And he gives a screenshot of this Bloomberg article that says, "Subprime lender PrimaLend enters bankruptcy after bond default. PrimaLend Capital Partners filed for bankruptcy after months of negotiations with creditors following missed interest payments on its debt. PrimaLend, which provides financing to, wait for it, auto dealerships. Remember Tricolor? That happened like what, 3 weeks ago, 4 weeks ago, something like that. Tricolor auto loans and that whole thing. Yeah, they're not the only ones. They're not the only ones. So PrimaLend, which provides financing to auto dealerships that cater to subprime borrowers. Remember the word subprime. Where did we hear that? 2008. Subprime borrowers listed estimated assets and liabilities below $500 million each, according to court documents it filed in the Northern District of Texas. In a press release, PrimaLend said it was pursuing a sale of the business in bankruptcy court and would continue to fund and service loans to its own borrowers. PrimaLend finances, quote, buy here, pay here auto dealerships. Auto dealerships, which serve low-income borrowers. Again, think 2008. Quote, no debt is being called due or accelerated as a result of this process. PrimaLend's chief executive officer, Mark Jensen, said in a release, quote, we deeply value our dealer-borrower relationships and look forward to continuing to serve the buy here, pay here industry as we move forward, end quote. The company has received a commitment for bankruptcy financing to help fund operations in Chapter 11 from existing lenders, according to the release. So we've got another one. Tricolor was first, and now we're looking at PrimaLend, and this is all due to subprime borrowers again. What does it mean? It means nobody learned anything, but moreover, it demonstrates that the credit markets are out of control. They just are out of control. The only way that anybody can make money is to lend real money to people that can't actually afford to borrow that money so that they can go buy some real asset with the hope that they pay it back in monthly payments of interest and principal, and it just never happens. So you got to start wondering, why on earth would PrimaLend make loans in the exact same environment of 2008 to people that were the exact people that loans were being made to in 2008. There's something else here. The business model doesn't have anything to do with, oh, we're just trying to help the low income people. That's not the business model. The business model is somewhere in the back end, and I don't have enough neurons to rub together to figure out that picture. But it is not about providing loans to low income people. Is it predatory? Oh yeah, it's predatory, but it's predatory on both sides of the fence. But again, nobody is doing this after what we learned in 2008. Nobody's doing this. And probably back in 2008, nobody was actually doing this to quote unquote service these low income people. Everything is predatory. There is nothing but sharks and barracuda and piranha and all that crap swimming in salt and fresh waters. Be terribly careful out there. My advice, buy Bitcoin, hold Bitcoin. But you might not be able to do it as a treasury company in Asia. Asian stock exchanges slam door on Bitcoin treasury companies, according to Vismaya V out of Decrypt. Major Asian stock exchanges are rejecting firms pivoting into digital asset treasuries. A clampdown experts say is needed to prevent markets from being exposed to severe volatility risks. Oh my, the humanity. Hong Kong Exchanges and Clearing has rejected the applications of 5 firms seeking to adopt Bitcoin treasury strategies in recent months, according to Bloomberg. India's Bombay Stock Exchange last month denied India's first publicly listed company attempting to adopt the Bitcoin standard, Jet King Infotrain's listing application after the IT training company planned to allocate 60% of raised funds to Bitcoin. In Australia, the ASX bars listed companies from keeping over half of their assets in cash or cash-like holdings, effectively ruling out digital asset treasury pivots. Joshua Chu, lawyer, lecturer, and co-chair of the Hong Kong Web3 Association, told Decrypt that fragmentation across Asian jurisdictions will likely persist because each market prioritizes distinct policy objectives. Quote, Singapore's regulatory emphasis centers on payments and the regulated use of tokenized payment instruments, whereas Hong Kong's development is more product-centric, focusing on governance, investor protection, and the regulatory treatment of crypto-enabled offerings within capital markets, Chu explained. He added, quote, India pursues a much stricter stance on crypto rebrands and related activities, and Australia maintains a cautious, market conduct-oriented posture in its exchange frameworks. The crackdown comes after retail investors lost an estimated $17 billion on digital asset treasury trades, according to a recent 10X report. The pushback comes as hundreds of companies globally have adopted the Bitcoin treasury model pioneered by Michael Saylor's strategy, which now holds over 640,000 BTC. This week, Citi, C-I-T-I, the bank, Citi, gave strategy a buy rating with a $485 price target, but warned the stock presents significant risks due to its positioning as a leveraged proxy for Bitcoin, noting even moderate Bitcoin price declines can lead to magnified shareholder losses. Well, that's just a CYA statement. That's all that is. I mean, of course, they're going to say that. That's not actually newsworthy. I'm sorry about that. On prediction market Myriad, launched by Decrypt's parent company Dastan, users overwhelmingly expect strategy to stay on course on its Bitcoin acquisition spree, placing only a 7% chance on the firm selling any Bitcoin this year. Quote, the elephant in the room, are DATs really justified? Chu questioned, noting without a credible business case, rigorous governance, robust custody, and transparent risk controls, such DAT structures can become misaligned with shareholder interests and could invite the kind of liquidity and governance risks regulators worry about. He warned against loosening traditional corporate rules for crypto treasuries, noting they protect against volatility arbitrage shells disguised as leveraged Bitcoin plays that have led to recent retail losses. Traditional corporate rules should still govern digital asset treasuries, he said, warning that loosening them risks a repeat of the dot-com era's speculative frenzy without revenue backing. Siddharth Bharwani, JMD and CFO of JetKing Infotrain, told Decrypt the company's appeal to the Securities Appellate Tribunal following BSE's rejection isn't about confrontation, it's about clarification. He called the rejection, quote, a missed opportunity to explore how Indian-listed companies can responsibly innovate with Bitcoin in ways that add long-term shareholder value. Man, where have we heard that before? Quote, India is unique in its challenges, Bharwani said, noting that while there is demand for digital assets and flourishing ecosystems being built, a lack of clarity is causing founders to move away offshore. End quote. Countries like Japan and the UAE are creating regulatory frameworks, he added, while India, Hong Kong, and Australia need to openly support such innovations. Well, okay, India, they definitely do. Expecting Hong Kong and Australia, of all places, to follow suit, no, man. No. I mean, Hong Kong would have. In fact, Hong Kong would have been the leader in all of this had they not been folded back into China. What was that, 99? Somewhere around there? I can't remember. They got folded back into China. China promised that Hong Kong would remain independent. And then, what was it, 2018, 2019, somewhere around there is when China said, yeah, bullshit. We're taking it all over. And now Hong Kong, that's when you have the red umbrella unrest and demonstrations over there in Hong Kong. And they lost. If that hadn't have happened, I guarantee you, it wouldn't be South Korea. It wouldn't be the center of all this, like this ecosystem that's developing around DeFi and treasury companies and all that stuff. That shit would be hardcore centered in Hong Kong. Now, Michael would have started it and he'd stay here in the United States, and you'd have a lot of United States companies. But if Hong Kong had embraced it or had been in a position to embrace it, they would, and it would have been a completely different landscape for digital asset treasury strategies. But even me is in agreement in a large part with Chu when he's like, dude, do you have a product for sale? Oh, I'm sorry, you don't? All you do is construct debt instrumentation and sell it to retail? Yeah, not interesting. And it's not. And again, the only way that strategy remains strategy is if they come up with some kind of service that makes a revenue that's based on their Bitcoin holdings that is not the construction of brand new shiny debt instrumentation to sell to retail. They got to start doing shit like making loans or something, some kind of financing, something that's going to bring money into the coffers that is not retail saying, I want your newest yield-bearing senior note thing, right? Honestly, it's becomes all so very tiresome, which is when you need to pop open a bottle of red wine or white wine. You can get both from Peony Lane Vineyards, and you can find that at peonylanewine.com. That's Peony lanewine.com, peonylanewine.com, and he takes Bitcoin for his wine. Because if you're not taking Bitcoin for your goods and services, you're not in the Circle P. The Circle P is open for business, and it's where I bring regular retail plebs just like you that make something or have something of a service for sale in Bitcoin for people and plebs just like you who want to buy those goods and services in Bitcoin. And you can do that at peonylanewine.com. Go to peonylanewine.com and make sure you use Bitcoin and in the coupon code. Now, he's not going to give you a discount, but it does let him know that you heard about his wine here on the Bitcoin and podcast. And if he chooses, because we don't have a contract, it's just a digital handshake, he can pay me in Satoshis what he thinks that sale would have been worth here on the only value for value advertising model anywhere on the web, or at least in podcasting. Make sure you consume your 40 hours per week, by the way. All right, on to Andrew Cuomo and his dying mayoral campaign in New York City. Mamdani is handing Cuomo his ass. Mamdani is going to win. Do I like him? No, I of course not. I don't like Mamdani. I'm actually kind of weirded out that so many New York City residents want this guy in, but it doesn't matter whether you love him, hate him, completely indifferent. He's going to win this shit hand down. So that's why Andrew Cuomo's crypto Hail Mary is unlikely to give him an edge over Mamdani, Aaron Wood, Cointelegraph. Former New York Governor Andrew Cuomo lags far behind Democratic frontrunner Zoran Mamdani, despite unveiling his proposal to make the city a, what? Sing it with me, crypto hub. Cuomo's plan, announced on Sunday, would create a new office that would be responsible for attracting emerging tech companies, including cryptocurrencies and blockchain. The move follows similar initiatives from outgoing Mayor Eric Adams, which have yielded mixed results so far. The mayor's office reported that many crypto startups have appeared in New York, while existing crypto businesses have not seen much change. Some have noted that the mayor's office generally has little influence over how and whether the crypto industry develops. With the mayoral election just 2 weeks away, thank God, 2 weeks away, a last-ditch effort to appeal to the crypto industry may not be enough to give Cuomo the edge over the frontrunner. On Sunday, Cuomo's campaign announced that if elected, he would create a chief innovation officer within his administration to attract business in emerging technologies. He would also create an innovation council comprising executives from 3 industries: blockchain, biotech, and artificial intelligence. You knew it was going to be in there. Cuomo said, quote, "The next mayor must make sure we're also leading in the technologies that will define the next century: AI, blockchain, and biotech. That's what this position is about, keeping New York City not just competitive, but dominant in the global innovation economy." End quote. The appeal of turning to the crypto lobby is understandable. Crypto lobby groups broke campaign funding records in the 2024 elections and made digital asset regulation a top priority for lawmakers in Washington. The Winklevi, otherwise known as the Winklevoss twins, whose donations to crypto industry lobby groups have reportedly broken $30 million just this year, have also been harshly critical of Cuomo's main opponent, Democratic candidate Zoran Mamdani, in a rambling June X post over whether he would get involved in the NYC mayor race by supporting a candidate that can defeat Zoran Mamdani. Tyler Winklevoss condemned Mamdani and Democrats writ large. I love it when people use the term writ large. It means everybody, everything else. Anyway, he said that democratic cities were broken kleptocracies and that anarchy and socialism are the next logical steps in that story arc. He said that financiers and hedge fund managers have failed to protect the system that allowed them to achieve their success in the first place and has allowed New York City to once become the greatest city in the world. These hedge fund managers and financiers, including pro-crypto Pershing Square CEO Bill Ackman, have reportedly donated millions to Cuomo's campaign in recent weeks. But an appeal to pro-crypto hedge funds may not be enough to move the needle for Cuomo. According to a recent AARP poll, Mom Donnie enjoys a double-digit lead with 43.2% support, followed by Cuomo at 28.9%, Guardian Angels founder Curtis Sliwa at 19.4%, and 8.4% undecided or preferring another candidate. Crypto didn't break into the top concerns for respondents. Quote, cost of living remains the top issue for nearly 2/3 of voters, with public safety and housing affordability also key. Well, cost of living and housing affordability kind of go hand in hand, but whatever. Despite concerns about the city's direction, optimism about future improvement under new leadership has grown modestly since the August poll. And they go on a little bit more, but what we really need to focus on is that the 2024 presidential campaign in the United States started something akin to Michael Saylor's strategy of having a strategic Bitcoin reserve. Trump won that election because he appealed early to Bitcoiners and obviously shitcoiners as well. I know it's sad, but it's true. That's how he won that election. Had he not had gone to, I can't remember if it was Miami or Nashville where the big Bitcoin conference was during that time, but he early on came out swinging for Bitcoin. But you knew he was full of shit because the last thing he said at that keynote speech at the Bitcoin conference was something akin to, now go have fun with your Bitcoins, which told me he didn't understand anything about it at all. It didn't stop him from making $1 billion for his family on Trump coin. I mean, I don't have to love Trump. I don't have to hate Trump. I'm actually neutral on the guy. There's some shit that I think he's doing good at. There's a whole other raft of shit that I think he sucks at. It's welcome to the United States presidency, ladies and gentlemen. I mean, girls and boys, there's hookers to the left and cocaine to the right and beer in the fridge in the back. It's always the same. There's never been a president that everybody just said, you know what? I like this guy. I like everything he does. Nor has there been a president where everybody absolutely hates everything he does. And don't listen to the media because the media has been bought and paid for like 50 years. But I am saying this. When you see Andrew Cuomo going back into the Statue of Liberty play and then break out and run for a Hail Mary and try to huck that ball to any receiver that he's got downfield, and that's way down there, you know he's in trouble, and you know he knows he's in trouble, and you know that his top advisors also know that he's in trouble. Mom Donnie's got this shit sewn up. There is no appeal to Bitcoiners, shitcoiners, altcoiners, ICOers, whatever DeFi guys. He's losing this. He's already lost it. It's sad for New York City to see Mom Donnie come in. If they think it's bad now, whoa, Nelly, they ain't seen nothing yet. Now, let's shift gears and get onto a warpath with Senator Elizabeth Warren slamming stablecoin law and urges Treasury to address Trump conflict of interest concerns and financial risks. See, I hate Elizabeth Warren with a passion. She straight up lied, bold-faced lied to every American citizen when she said that she was like a quarter Native American. I have as much Native American blood in my genetics as she does. She's a liar. But I agree that Trump has a major conflict of interest with what's going on with Trump coin, given the fact that he's president of the United States. Even I agree with Senator Elizabeth Warren on this. See, there's nobody that I can find that I 100% disagree with or 100% agree with. Anyway, this is Sarah Wynn writing for The Block. Crypto critic Senator Elizabeth Warren lambasted the stablecoin bill signed into law a few months ago and is urging the Treasury Department to fill in gaps to address President Donald Trump-linked conflicts of interest, as well as to protect consumers. Warren, who is the top Democrat of the Senate Banking Committee, called the Genius Act, as it is aptly called, a light-touch regulatory framework for crypto banks in a letter sent to the Treasury Secretary. Punchbowl News first reported on this letter, quote, "It's critical that Treasury takes steps to implement and enforce the law in a manner that attempts to limit severe risks to United States financial stability, consumers, taxpayers, and national security," Warren said in the letter. Genius was signed into law by Trump in July. The act requires stablecoins to be backed and fully backed by U.S. dollars or similarly liquid assets. It mandates annual audits for issuers with a market capitalization of more than $50 billion and establishes guidelines to foreign issuance. Now, lawmakers have turned to drafting and passing bills to regulate the crypto industry at large, which Warren says can be used to address weaknesses in the Genius Act. This comes as Senate Democrats and Republicans are expected to hold 2 separate meetings with crypto executives to discuss that larger bill. The Democrat meeting is slated for 11:30 a.m. Eastern Time, and the Republican meeting at 2 p.m. Eastern Time Wednesday. That would be today. Quote, "Treasury has an opportunity to address some of these risks in bipartisan negotiations over legislation being considered in Congress to set the rules for the overall market structure of the crypto industry," Warren said. Warren is not alone in raising concerns about weaknesses in the Genius Act. Last week, Federal Reserve Governor Michael Barr said the law leaves several regulatory gaps and called on federal banking agencies and states to work together on rules to close them and safeguard the financial system. A major concern for Democrats has been President Trump's involvement in the crypto industry, particularly for stable coins. Some Democrats voiced concerns about Trump's family-run World Liberty Financial USD, which is now one of the largest stablecoins in the world, according to Bankrate. Now, I'm just going to pause right there and say, dude, no, it's not. Or at least, okay, sure. It could be one of the largest. But as far as effectiveness, it's not large. Nobody's using this shit. People are using Tether and they're using Circle. That's what they're using. And they might actually also be using Tether's gold-backed stablecoin, but even then, it probably pales in comparison to the actual use of Tether itself as a stablecoin. To say or to conflate the fact that Trump's stablecoin its usage is somehow akin to the size of it is ridiculous. It's not being used. Most of this garbage is not being used. Circle and Tether, those are being used. The rest is just sand in a play box. Anyway, quote, "Given the importance of addressing this glaring problem, I expect that Treasury will propose specific steps for addressing corruption." Holy shit. Treasury will propose specific steps for addressing corruption it implements in the Genius Act. Wow. Explain how it has insulated its proposed rules from conflicts of interest, and advocate for a meaningful legislative solution as Congress considers setting the rules for the broader structure of the crypto markets, Warren said in the letter. Treasury also needs to propose strong plans for addressing illicit finance and how it plans to mitigate risks that consumers will get ripped off in transactions involving stablecoins, Warren said. As for financial stability, Warren said the Genius Act does not have the necessary safeguards to ensure that stablecoins don't blow up our entire financial system. The Massachusetts senator cited Paxos's recent accident, minting 3 trillion Pi USD stablecoin tokens. That's the PayPal one. And that one actually is also being used, but not to the degree that Tether and Circle is. I'm just saying. But they accidentally minted 3 trillion Pi USD stablecoin tokens, which the company attributed to a technical issue. Quote, "This incident demonstrates the serious risks that operational failures can pose to an issuer market integrity and potential financial stability. Treasury owes the public an explanation for how it intends to address those risks, and if it cannot, the authority it needs from Congress to do so. Again, I'm honestly, as much as I cannot stand this woman, she makes it, I mean, that's a good example. Accidentally minting 3 trillion US, or actually it was 300. It wasn't 3 trillion, dude. It was 300 trillion. Let's be very clear about this. It was 300 trillion. So she didn't even get that part right. But she does make a good point. That's a serious risk. It's a serious risk of operational failure in a global financial market. And thank God, not that many people use Pi USD. But if it had been a tether mistake, well, we see some real problems there. But hey, all this, it's all new, and everybody's trying to navigate this shit. While these assholes spent most of their time since 2009 they were doing one of two things since 2009. They didn't even stop to look at it, i.e., they didn't even know about it, probably until 2017. And then they spent the next few years, actually up until 2023, 2024, when Trump won, when it was going to be clear that Trump won or was going to win, and he was going to do it with a whole bunch of Bitcoiners and other cryptocurrency guys at his side. They laughed at us and they told us we were evil and we were criminal, and they still never tried to wrap their head around it. And now they are reaping what they have sown. A complete lack of understanding of how any of this shit works. They've completely dropped the ball. They have no way out, and they're depending on these 2 meetings with some of the worst representatives of certainly Bitcoin, but even crypto. I mean, even the crypto ecosystem. You got Brian Armstrong. The rest of this panel that they've put together to go talk, quote unquote, talk sense into the Democrats and the Republican sides of Congress. It is a terrible lineup. They could have picked any number of people that really know what's going on, but they didn't. They asked the worst representatives of this entire industry to come, quote, educate them on stablecoin, the regulations that are necessary for this, how they think financial markets will be structured in the future. These are not the droids you're looking for. Let's run the numbers. CNBC Futures and Commodities, and oh my God, breaking news. The Dow has dropped 200 points on more trade fears. So I guess Orange Man opened his mouth and said the words tariff and China all in the same sentence. But energy seems to be doing okay today, making actually kind of a slight recovery. Brent North Sea is up 2.2% to 62.67 a barrel. West Texas Intermediate oil is up 2.5% to 58.63, and natural gas, as the hedge for the petroleum markets, is down a point to $3.44. Gasoline is up over 2 points, and Murban crude, everybody's favorite light sweet crude, is up 2.1% to 64.54. Metal rocks are doing okay, except for gold, who is down 1.05% back to $4,066. Ooh, is it going to lose the 4K handle? I don't know. Somebody check on Peter Schiff. Palladium is up 1 1/3. Platinum is up 2 1/3. Silver is up almost a half. Copper is up almost a half as well. Ag is pretty much fully mixed. Cocoa knocking it out of the park. 6.8% to the upside. Biggest loser, Rough rice, 2% to the downside. Live cattle is down 1. Lean hogs down 0.69%. And feeder cattle are down almost 2 points. I guess this is the fallout from Trump saying that we're going to buy Argentine beef. I can't start talking about this because I'm going to start ranting. This is a terrible idea, is all I'm going to say. Support your United States ranchers. Please go find out who they are. Go to Beef Initiative. Look, Google Beef Initiative maps. There's a map of somebody who's put their name in the hat with the Beef Initiative, my friend, Texas Slim. Find the one that's closest to you. Go out and meet them. Go to the farmer's market. Go meet them. Go buy their meat. We don't need to support Argentina. We need to support our own cattle people. I told you I'd rant. S&P is off 0.7%. NASDAQ down 1.3. Dow is off 0.5 and is now down 259 points. S&P Mini is down almost a full point. So I guess Trump did say China and tariff in the same word. Although we still have 108,180, but it may be dropping yet. 160 is going to drop again. What'll happen? What'll happen? Nothing. $2.16 trillion in market cap gets us 26.6 ounces of shiny metal rocks with our one Bitcoin, of which there are 19,938,148.04 of. And average fees per block are low, 0.02 BTC, taken in fees on a per block basis. There's 19 blocks carrying 34 unconfirmed transactions waiting to clear at high priority rates of 3 sats per VByte. Low priority is going to get you in at 1. Mining 1.12 zettahashes per second. So we're holding steady on hash rate, which is the security backing of the entire Bitcoin network. I feel safe, and you should too. From Don't Fucking Dance, yesterday's episode of Bitcoin. And I got Jay with 37 sats. Wow, thank you, brother. Says, with regards to trying to find dips to buy, back in the day, I used to use Gemini to buy Bitcoin. Gemini has a great API for algorithmic trading. I did not know this. At the time, I had also read a great book called Algorithms to Live By. In it, the author describes the optimal stopping algorithm. In essence, it lets you choose the best time to buy or sell by watching the price for the first 37% of your time period. Then, for the rest of the time, you buy at the first time you see the price dip below the lowest price you saw in the observation period, or just buy at the end of the period. Theoretically, you have a 37% chance of catching the best price in that period. I wrote an algo trader in Python to actually use this buying algorithm for a span of 6 months, and it actually worked pretty well. I didn't do it any deeper analysis on it, but I would venture to say it would get you a lower cost basis than buying at a set time each week. Thank you, Jay. I appreciate that. I'm going to have to look into this book. And I'm not going to be looking into this book because I trade. I don't trade this crap, okay? Even when it comes to Bitcoin, which is not crap, I still don't trade that crap because it's going to kill me. I'm not good at it. However, a book about algorithms in general, it might be worth it. Turkey with 500 says nothing. And Pies with 121 says, thank you, sir. No, thank you. And I think Psyduck with 754 says Psyduck. And that's the weather report. Welcome to part 2 of the news that you can use. I got Peter Brandt here, who I guess is taking drugs or something, because only a low-life, thug-life heroin addict would actually say the following. Bitcoin chart is echoing the 1970s soybean bubble. When you get done laughing, listen to the rest of it from Saran Lyons out of Cointelegraph. I'm pretty sure I just butchered that dude's first name. But Bitcoin's price chart has started to show similarities to the soybean market 50 years ago, which saw prices top before plummeting 50% as global supply began to outweigh demand, warns veteran trader Peter Brandt. Let's just pause and take a deep breath. Bitcoin's price chart looks like a soybean market chart 50 years ago that plummeted 50% because global supply outweighed demand of a commodity, of something that you grow, and that more people started growing. So supply went up. However, other Bitcoin analysts are confident that the charts are signaling further upside ahead. Pausing to say, don't listen to these directions. Let's just concentrate on the fact that Peter Brandt is comparing, I would say apples to oranges, but in this case, it's more like apples to fish or a rock or something. Quote, Bitcoin is forming a rare broadening top pattern on the charts. The pattern is famous for tops, Brandt told Cointelegraph. In the 1970s, soybeans formed such a top and then declined 50% in value, Brandt said. Brandt then warned that if history repeats, it won't just affect Bitcoin. It will also leave Michael Saylor's company strategy underwater. Brandt further warned that the big Bitcoin pump the crypto community has been waiting for may never come to pass, and that instead Bitcoin could head to bear levels as low as 60,000. Well, most analysts, however, believe Bitcoin still has one major rally left in this cycle, a move that could push Bitcoin's price as high as $250,000. Again, stop listening to these numbers. I'm actually going to scan this to look for more of Peter Brandt before we discuss this a little bit. Extreme fear, Alpha BTC. No, that's all it is. So here's my problem. I didn't want to bring this to you because it's got price predictions on Bitcoin. Either way. No, this is ludicrous. You're comparing a cryptographically secured person-to-person money transmission system and control grid to soybeans, a commodity that is physically present, that more can be grown of and can be consumed, never to be seen again, from the 1970s. I've never seen Peter Brandt reach this hard, and it makes me wonder the following. Did Peter Brandt take a section, because if I go back to this graph that where he's talking about the broadening top, the graph in totality spans from September 22nd to yesterday. Not September 22nd, 2004, not September 22nd, 2003, certainly not September the 22nd, 2009. No. 3 weeks. Let's give them 4. Whatever that number is. I'm not going to do math on air. And so right there, we have a major problem. But second, I think he might have taken a snapshot or just, got the data down in some kind of CSV file, like an Excel file or even just a comma delineated file in text format, and gives it to something like, I don't know, ChatGPT or some other AI, and then says, find me all of the examples in history in markets that this graph matches or that this data would match. And AI kicks out, this looks a lot like what happened to soybeans in the 1970s. And Peter's like, brilliant, bring it. And then starts tweeting. They're not bringing their best anymore. I remember when Peter Brandt used to make actually good arguments. Well, not anymore. Not if he's going to compare Bitcoin to a farm commodity. This is just beyond the pale. Okay, so Taproots. Not from trees, Bitcoin Taproot. Taproot assets, also known as TapAss. Bitcoin as a medium of exchange. This is an article from Bitcoin Magazine, penned by Hannah Rosenberg. Yes, let's go. What is Bitcoin and who is it for? There are a plethora of catchphrases available on Twitter to cover this one. Bitcoin is for everyone. No, wait, it's for anyone. Bitcoin is a store of value. Bitcoin is a medium of exchange. We could do a classic appeal to authority and declare that Bitcoin is exactly what Satoshi described, a peer-to-peer electronic cash system. Bitcoin becomes what we make it. It serves the people we choose to build for. If we want Bitcoin to be a store of value or medium of exchange, we have to build the protocols and services that make this happen. Sometimes it's more interesting to ask specifically, who are we building for? Are we building for Americans looking for long-term investments? Are we building for a shop owner in Brazil, a reseller in Turkey, a software developer in Nigeria? If we want Bitcoin to be a medium of exchange, we need to focus on the users who need it most, and Taproot Assets is the tool for that job. Taproot Assets allows us to take the assets and units of account that people want and need today as mediums of exchange and move them to Bitcoin infrastructure on the Lightning Network. From a technical perspective, Taproot Assets is a protocol that allows for the minting of assets on the Bitcoin blockchain in a very block space efficient fashion using Taproot transactions made possible by the November 2021 Taproot soft fork activation. Client-side validation is used, the protocol is opt-in, and no consensus changes are required. Fungible assets are exchangeable on the Lightning Network, and you can use this protocol on mainnet today. Taproot Assets is a flexible protocol that's already opening the door to a wide variety of use cases, but the core use case is stablecoins on the Lightning Network. So why is this such a powerful tool for adoption? Well, meet people where they are. It's easy to get immersed in the Bitcoin world where we use Bitcoin, talk about it constantly, and dive deep into all the things that it fixes. That passion and curiosity is powerful, but the real magic happens when we connect that world to people outside of it. Most people don't have the time available to study monetary theory or economic history, and free time and disposable income are not the norm in the world today. Stay humble. If we want Bitcoin to serve the world, let's meet people where they are, and we can. We have the tools and the skills to build things that are truly useful, products that people love, not because they're Bitcoin powered, but because they solve real problems. Adoption won't come just from our impressive understanding of Austrian economics. It will come from building things that are so useful people can't help using them. The true measure is in the utility. The true measure is in the users. Number of people go up. Stablecoins. And so let's talk about stablecoins. Love them or question them, stablecoins have clearly found product market fit. The invisible hand has spoken. I guess we're talking to the hand now. Let's look at some numbers. In Brazil, approximately 90% of crypto transactions are tied to stablecoins, primarily for payments and remittances. Tether estimates that it has 434 million users worldwide, transacting 31 billion USDT daily. About 13% of the total USDT supply is held by savers who are likely in emerging markets without other access to dollars. Tether has a market cap of $153 billion and recorded over $10 trillion in total volume in the year of 2024. USD coin, or USDC, follows with a $61 billion market cap. Utility. Why have the people chosen stablecoins? Utility. Most people around the world don't have the luxury to hodl through a bear market. Most humans don't ponder the intricacies of fractional reserve banking. They're busy living, busy being fathers and mothers and small business owners and doctors and carpenters and farmers and teachers and students. All the things that keep the world turning. Most people are simply seeking an improvement in their day-to-day lives, and it's our job as experts on money to give them what they need. They need stability and affordability. As the Bitcoin adoption story goes, first we achieve store of value, then medium of exchange, and then unit of account, the final boss. But if we facilitate stablecoins, are we preventing Bitcoin from achieving unit of account? No. Bitcoin will be a unit of account if and when the world needs it to, if and when we make it available. Those choosing to use a stablecoin on the Lightning Network will be doing so because it is the best option for them. It's the option that brings the most utility. They aren't thinking about adopting Bitcoin, and they don't intend to adopt Bitcoin, the unit of account. But they will be adopting Bitcoin, the network. They will be adopting Bitcoin, the payments infrastructure. We often think of replacing the Visa network, and to do that, we have to be more useful than Visa, which processes transactions in 175 different currencies. Our Turkish reseller is an expert in what he does and not an expert on decentralized networking technology. He'll choose Lightning over Visa when it becomes the better, more affordable, easier option for running his business. And for many businesses, Lightning already is faster and a more affordable option. Let's imagine that pre-coiner shop owner in Brazil. She's managing her business, making transactions using a stablecoin via a Taproot Assets Lightning wallet. She's made the switch to Bitcoin infrastructure. She was enticed to do so by a simple, easy-to-use mobile wallet that simplified her business, cut her costs, and reduced her risk. This wallet allows her to make instantly settled, global, incredibly affordable transactions and to do so in a wide variety of currencies. She came for the utility of this medium of exchange, but is now one button away from losing her pre-coiner status. And should that global fiat money collapse finally arrive one random Tuesday afternoon, she just needs to push that button to switch out of fiat and into sats because she is already running on the Bitcoin infrastructure. The potential and utility of a Taproot assets-enabled, multi-asset Lightning network is grossly underappreciated. Seriously, it's a medium of exchange like the world has never seen before. Application builders and their users can have any unit of account that they like. US dollars, Brazilian reals, euros, etc. And it's all routed through Bitcoin. Taproot Assets Lightning transactions require Bitcoin liquidity. These transactions support and grow the Lightning network and enable a plethora of options. A payment can be sent out by Alice in dollars, but Bob can receive Bitcoin. Alice can send another payment in dollars that will be routed through the Lightning network through the sats-denominated liquidity in the center of the Lightning network onto Carol, who opts to receive a euro-denominated stablecoin. Our Turkish reseller can sell goods to our Brazilian shop owner using a stablecoin. Not only can he interact with businesses around the world without friction, but also any regular Bitcoiner can transact with either using sats seamlessly. No need to touch that stablecoin if they don't want to. And it gets even cooler. Let's imagine for a moment the following scenario. And here we have a post from a person by the name of Michael Levin on X that says, let's double click with a hypothetical. I'm in Tokyo with a friend, Sophia, from Mexico. We get ramen. I pay the bill. She pays me back. I pay USD, but the restaurant receives Japanese yen. Sophia pays pesos to me, but I receive Bitcoin. Routed through Bitcoin liquidity on Lightning Network nearly instantly for low fees. Interesting. Oh, wait. Oh, here it is. A global, scalable, instantly settled payment network that's meaningfully cheaper than Visa, a payment network that now gives users the option to transact in whatever coin they want. This is the brilliance of building with Bitcoin as infrastructure. People adopt the network before they even know it's Bitcoin. Okay, getting back to this article, in conclusion, if we want to see Bitcoin as a medium of exchange, if this is what we are building for, it's our job as the experts to give the people what they are clearly telling us that they need: instant, low-fee, stable value transactions. In other words, multi-asset Lightning. Now, of course, Taproot Assets is a versatile protocol. It can and will be used for all sorts of things, including use cases that appeal to the American crowd who see Bitcoin primarily as a long-term investment. Yay, permissionless innovation. With this protocol, we're helping usher Bitcoin in its medium of exchange era. All right, so that's the end of the article. She makes a good point. Is it she? Hold on, I forgot the author's name. Yes, Hannah makes a good point. Taproot Assets right now are kind of like, well, they're being blamed for everything from ordinals to NFTs on Bitcoin, and that's fine. But we have seemed to have forgotten about the other stuff that Taproot Assets was supposed to do. And Hannah's got a point. I've been saying something similar for a while now. It's about the user experience. You know, if like this whole, like going back to my, when I first started talking about how important user experience was, Square and Square Bitcoin, the introduction, we'll get it November the 10th. Some people are already experimenting with it and it seems to be working just fine. Square will be able to transact with Bitcoin, and all the merchants already will have that capability. And we can think about it from the Cash App standpoint, which has had Bitcoin on it for years now. And yet every single time that I talk to somebody and they say, I don't even know how to buy Bitcoin. And it doesn't always work because not everybody has it, but I'll say, well, do you have Cash App on your phone? They're like, yeah. And I go, you can buy Bitcoin right now. And they're like, what? And I go, open up your Cash App. Have you ever really looked at the bottom of the screen on your phone? There's a Bitcoin symbol. And they're like, holy crap. Like, yeah, hit the Bitcoin symbol. And then the interface for that whole side of Cash App comes up for them and they go, I can just buy this directly from my bank account. And I'm like, yes, you can, because you've already put all that information in. And we can talk about KYC AML another day. My point is they already have it. And the guys the merchants that are using Square, they will already have it as of November the 10th. They'll already be able to interact this way. It's not going to be an upgrade that they make. It's not going to be a module that they have to buy, because if you did it that way, they wouldn't buy it. They're perfectly fine living life just the way that they're living life right now because they think everything is fine. We know it's not, but most people don't realize that. They feel something's wrong, but they cannot put their finger on it. And you can lead a horse to water, but if you wait for him to drink, you'll both die of dehydration. So, Hannah makes a very good point. Using Taproot Assets, the Lightning Network, Bitcoin Network, and then I want to just go ahead and fold in cashew and Fedimint all into a nice little package. These very easily integratable features this set of tools that we have is a lovely set of tools to build with. And she's right. If you get somebody using Bitcoin, the network, Lightning Network as the network, Cashew as the network, but they never know what it is that they're actually doing. They don't have to see under the hood of how all this stuff works. Well, you've got a smash hit on your hands. And there really are just one step away from becoming a Bitcoiner. And speaking of moving on, Bitcoin OS secures $10 million led by Greenfield Capital to unlock ZK proof ZK proof programmability on the Bitcoin mainnet. Juan Galt, writing for Bitcoin Magazine. Today, BOS announced a successful $10 million fundraise. BOS is an innovative Bitcoin operating system built around zero-knowledge proofs, a layer 2 protocol designed to unlock smart contracts for Bitcoin, such as interoperability across blockchains, potentially unlocking institutional value for DeFi while opening Bitcoin yield opportunities for traditional finance. Greenfield Capital led the strategic rounds with backing from other capital investors. Funding will be primarily used to continue the momentum of technological achievements to transform the internet into a unified international economy of trust built on Bitcoin, BOS said in a press release shared with Bitcoin Magazine. Founding partner of Greenfield Capital, Jasha Shmati, said Bitcoin OS's successful verification of ZK proofs directly on Bitcoin mainnet represents a fundamental breakthrough in blockchain infrastructure. They've achieved true Bitcoin programmability without modifying the base protocol, solving a challenge the industry has faced since Bitcoin's inception. This technology transforms Bitcoin from a store of value into the secure foundation layer for the entire digital asset ecosystem, end quote. BOS CEO and co-founder Idan Yago affirms, quote, "We are now in a very exciting time for Bitcoin, and this fundraising will strongly contribute to its exponential growth. The confidence instilled in us from capital investors and Bitcoin-focused funds is a testament to the high demand and strong market excitement in our achievements. We are proud to accelerate Bitcoin and BTC-Fi, BTC-Fi into true mainstream adoption while maintaining the decentralized and trustless ethos it was founded upon." I'm getting more and more tired of seeing FI tacked on to every word under the sun. It's like, I got cats, but they're not cat-fi. You know, when I take them to the vet, I don't have to finance it with cat-fi incorporated. It's becoming ridiculous. But BOS has achieved a series of technical milestones that have brought it recognition from industry players and investors, and highlights include an industry-first, bridgeless, cross-chain asset transfer, and the launch of Charms, a protocol for programmable tokens on Bitcoin that leverages ZK proofs to enable client-side validation of transactions. BOS is also integrated with multiple ecosystems. Oh, God. Notably, and here it comes, just hold on to your stomachs. BOS is integrated with multiple ecosystems, Cardano, Ethereum, and Litecoin to enable trustless Bitcoin bridging. Oh, God, I can't believe I got through that. Most recently, BOS introduced Grail Pro, an institutional-grade protocol that allows BTC yield generation while retaining self-custody. Quote, "This is currently in a pilot with key institutions and custodians as Grail Pro aims to unlock $690 million of institutional BTC securely." All right, well, I don't care about that. But ZK proofs, that's been something that a lot of people really wanted that. Especially around 2017, when all the block size wars were going on, one of the things that was talked about was Zcash. Why Zcash? Well, because they had ZK proofs. A lot of the argumentation was, and still is, we can just do that on Bitcoin. We don't really need Zcash. And I won't even get into the fact that a whole bunch of people that I thought were solid Joes in Bitcoin are now Zcash heads on Twitter. It's sad, but it's true. But I believe it's because they're being paid to shill that shit. Other than that, ZK proofs ZK rollups, ZK snarks, all these kinds of things, they're valid tech. And it can definitely be done on the blockchain, but the argument was, we'd have to have a protocol change and nobody's going to go for that. And the theory was maybe not. And it looks like these guys have proven that. Now, is it totally above board? I don't know. Again, as always, we got to wait and see. But I mean, this story, along with the story that we just read, if this is true, and we can somehow or another keep the shitcoiners at bay, this could be very, very good for Bitcoin. And I guess I should say that Trezor, the wallet, has unveiled something called Safe 7, a quantum-ready hardware wallet with an open source chip. This is rather dubious. Let's find out more from Atlas 21. During an event held in Prague, Trezor introduced the latest product, the Safe 7, priced at 249 euros. Not probably worth it, but the device brings several innovations compared to previous models. The Safe 7 is fully wireless thanks to Bluetooth low energy connectivity. Big red flag. I don't want my hardware wallet connected to frickin' Bluetooth. Because it allows it to connect to any device, including iOS devices. The wallet features a 2.5-inch color touchscreen offering a 62% larger display, yada, yada, yada. But a central element of the new product is the Tropico 1 secure chip built on an open source architecture. Another key feature is its, quote, quantum ready protection. Both the bootloader and authenticity verification systems use post-quantum algorithms, the company stated. Alongside the Tropico 1 chip, the device also includes a second EAL6 Plus certified secure element that is NDA free. That's all I need to know right here, because when they say this wallet is quantum safe, or rather quantum ready, I think that a lot of people are going to mistake it for all the news around the potential and forthcoming and obviously going to happen quantum attack on Bitcoin. There is a difference, and I want to be sure that you understand what's going on. Trezor is not making Bitcoin's ECDSA signing algorithm any safer. That's the attack surface. When I roll my private keys up from like a brand new hardware wallet or any number of other places that I can roll my private keys to build a brand new Bitcoin wallet, it's using ECDSA. That is an algorithm, and it is quote unquote not quantum safe, which means that if somebody can break my private key encryption using quantum technology, then my Bitcoin can completely be absconded with, because they would have complete access to any Bitcoin that was inside that wallet. That is not what Trezor is saying. Trezor is saying that this hardware wallet itself is quantum ready, but it has no impact on the private keys that have already been generated by the ECDSA algorithm. So please keep those two things separate, because I think that all I see from Trezor right now is this: it's quantum ready. It's the Safe 7, and it's quantum ready. I would like them to make a statement saying that, hey, this has nothing to do with the Bitcoin private key, public key pair generation algorithm. This is just about this wallet. But I kind of think that it's disingenuous. I don't mean to say that. I'm not really trying to accuse anybody, but unless you make shit clear to people, especially with all the quantum attack potential that that all the Bitcoin rags and all the shitcoin rags are like, oh my God, it's going to happen. It's going to be a quantum Hindenburg and we're all going to die and the humanity. And then you come out with something that's quantum ready. See how marketing works? Nobody's really looking at what do you mean by quantum ready, right? Because it's not really at the forefront of their marketing scheme, and it wouldn't do them well to do that anyway if what they are about is making money, which is that's what they are about. But I think it's a little disingenuous to just say, hey, our Bitcoin wallet is quantum ready. And it's also a shitcoin wallet too. It'll hold like all kinds of garbage crap. But hey, just be aware that Safe 7 is not going to somehow magically safeguard your Bitcoin against tomorrow's quantum attack, right? And I'm not even worried about the quantum attack. We got a ways to go before we get there. All right, so last up for the day, builders converge in Merida Startup Day, Yucatan 2025. It's a recap from Bitcoin News. Pleb Lab, the founder-run Bitcoin accelerator based in Austin, Texas, brought its 6th Startup Day program to Merida on October the 9th through the 10th in partnership with Yopaki. The program drew national attention, including a Televisa segment, I think they meant televised segment, featuring Francisco Chavarria, co-founder and CEO of Yopaki, and live coverage from Reporte Indigo that kicked off Thursday's session. Startup Day Yucatan gathered founders, developers, engineers, investors, and public sector leaders for 2 days of talks, demos, and on-the-ground merchant adoption across Centro. The director of economy and industry of Yucatan participated alongside local leaders, programming centered at White Paper House, a new community space that will host ongoing builder activity in Merida. Quote, Startup Day is a working sprint. We want builders shipping, merchants trying new products, and communities keeping value moving locally. Merida showed up. White Paper House gives this new momentum a home. So the program highlights was Yopaki deploying its new terminal product with local businesses during the week and announced new partner initiatives. The products were tested throughout the event with immediate feedback from the community. There was a Bitcoin startup announcement. Shock Wallet introduced Clink, a nostr native standard for secure self-custodial Lightning interactions with no web servers. Cascader announced work on Cascade 1 architecture, a self-custodied evolution of its platform. Runster unveiled a new app featuring Zap challenges and peer-to-peer functionality. Feed Filter previewed its upcoming mobile app slated to ship around the holidays. Pleb Lab co-launched the worldwide Breeze Builder Challenge from the Yucatan, with follow-ups planned during the November merge window and beyond in Austin. And there were some talks, real-time building on AI and Bitcoin, unpacking the Lightning Builder playbook, the anatomy of a Bitcoin hub was a different talk. Then there's Mexico and LatAm Bitcoin strategy. I would have loved to have gone to that one. And then a few other with people like Carlos Peniche, Lisa of Tokyo, Bitcoin Base and Fulgar Ventures. There was Raul with Signo. There's a lot of people here. And it's interesting that it happened down in the Yucatan instead of Austin, Texas. And I think that that's really important that Pleb Lab is reaching out there. So hats off to the guys over at Pleb Lab. Y'all are some of my favorite people in the world. That is it for this day's episode of Bitcoin, and it's in the can, brothers and sisters. So I'm going to go ahead and let you go. I got other stuff to do. I will see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.